we got to bring up Lewis Rogers up on stage and Natalie Mason up to the stage as well. They are presenting the Capital Square OZ Fund 9, which is a ground up development multifamily deal in Richmond, Virginia. I was in Richmond, Virginia earlier this year over the summer to co-host a one-day OZ summit with the folks over at Capital Square. We did a hard hat site tour of one of their buildings and generally just walked around downtown Richmond. Great OZ. I don't know if it's going to be eligible for OZ 2.0. So this might be last chance to get invested here. Natalie
That's the
and
main
Lewis,
point of our presentation.
Thank you,
there you go.
Jimmy.
Just setting the stage for you. Natalie and Lewis, you are all set for a 15-minute presentation. So for the next 15 minutes, the floor is yours. Please take it away. Thank you.
Wonderful, wonderful. Thank you, Jimmy. Hello, everyone. I'm Lewis Rogers, founder and co-CEO of Capital Square, and I'm joined by my colleague, Natalie Mason, EVP and co-head of development. We're Capital Square. We are a tax-advantaged real estate company. We're very well known for our Delaware statutory trust investments for 1031 exchange investors. We have development funds and a real estate investment trust. And over the last 5 or 6 years, we have focused on opportunity zone funds. You can see we're a large platform, nearly $8 billion of investments, over 6,500 investors, every one of them happy and thrilled with a big smile like Jimmy, over 175 real estate assets and more programs than you can imagine. Next page, please. We are a vertically integrated real estate company. One of our visions is to have in-house acquisitions, legal, accounting, asset management, development, construction management, and property management. And all of that supports 14,000 housing units across the Sun Belt. The development track record is broad and it's getting bigger, and it'll be bigger and bigger. We're talking about $840 million or so of total development cost. We're on Opportunity Zone Fund 9 that you'll hear about today. It's the bestest of the bunch, and it's going to be our pleasure to describe it to you. Natalie, do you want to take us away?
Sure. Thank you, Lewis. Hi, everyone. Thanks for tuning in. Thanks, Jimmy, for having us. We are pleased to introduce you to our current Opportunity Zone offering, CSRA Fund 9, which is, as the name would suggest, our 9th single asset Opportunity Zone development since starting our OZ development business in 2018. And it's our 6th OZ development in the submarket of Scott's Addition in Richmond, Virginia. Our OZ investment strategy across the Southeast has been to invest in opportunity zones that already have strong demographic and economic characteristics and that are positioned well to continue to grow and remain strong through a 10-year hold period. So think of places like Charleston, South Carolina, Raleigh, North Carolina, Knoxville, Tennessee, and Richmond, Virginia. These are all places where we have developed to date. Richmond continues to check all the boxes as a strong multifamily market and is a great place to invest. Just to name a few, CNN named Richmond the #1 best town to visit in 2024 because of its impressive arts and cultural scene. Travel and Leisure named Richmond the best place to live in Virginia. The state regularly holds the top spots in CNBC's annual rankings for America's top state for business, thanks to its healthy economy and business-friendly environment. More recently, Wall Street Journal ranked Richmond the #11 hottest job market. And when we look at our renter mix in our Richmond properties, specifically in our Scott's Addition properties, we see employers in insurance, finance, retail, education, government, and healthcare, employers like Virginia Commonwealth University Healthcare System, CoStar, Capital One, state and local government. Our renters in Scott's Addition are have great job profiles, and their household incomes are well in excess of $110,000.
We're an excellent place to live, work, and play.
And Scott's Addition is a neighborhood in the heart of Richmond. a former light industrial and warehouse neighborhood, it has transformed into Richmond region's top performing multifamily submarket. This is due to its status as a dining and entertainment destination. It is the neighborhood where young professionals want to spend their free time. It's where they want to live. It's centrally located and easy to get to the region's job centers. And it's walking distance to cultural hubs like the Virginia Museum of Fine Arts, the Science Museum, the minor league baseball stadium of the Richmond Flying Squirrels, that is actually currently being rebuilt. So it will be a brand new stadium for that baseball team. What we think is really interesting is when you start comparing census data of Scott's Addition census tract with Opportunity Zone census tracts nationally, you see some powerful results. So here's some stats looking at income levels, poverty rates, education levels of opportunity zones in general across the country, and then Scott's Addition in particular. So you can see that education levels are higher, poverty rates are lower, and incomes are higher than what you typically see in OZ neighborhoods. This slide compares the Scott's Addition census tract with the city of Richmond as a whole. So even just compared with other neighborhoods across the city that aren't necessarily Opportunity Zone designated, incomes are higher. Again, education, unemployment, those all bode better than what we even see in other parts of the city. So these data points are what are compelling to us and why we believe in this neighborhood in the long run.
How many of our residents come from out of town?
So with this is a great slide to talk about that with the buildings that we've delivered already in this neighborhood, the lease ups, we're looking at well over half, 60% plus of our residents are coming from out of town, from places like New York, Washington, D.C., San Francisco. People are moving here, and they're all moving here for jobs and quality of life.
How do they react to our rents that we consider to be at the top of market?
Oh, it's a great deal.
It's a
They
great
get
deal
more
for
space.
everybody.
They get more space for their money. They get to live in a walkable, wonderful neighborhood where they don't have to spend an hour commuting to their job.
So you could say we own this neighborhood.
You could say that. We're the expert in the city, specifically in this neighborhood. Richmond is where Capital Square is headquartered, and it's where we have our largest development footprint. This is our backyard, and we know it well. You can see on this page, we've delivered over 550 units already in this neighborhood, and we have another 350 units set to deliver actually in the next couple of weeks at a project called Chasen. We've invested over 110 million in OZ equity into this neighborhood, and the projects that have delivered have stabilized faster than underwritten and at rental rates that are top of market. And we're pleased that we've already been able to return capital to investors through the refinancing of those properties. Just a couple quick state case studies. This is Otis. Otis is our development actually right across the street from the land site of OZ9. So this is a really good comparison to example for the project that we plan to build on the OZ9 site. We delivered Otis in 2023. It was named the CoStar Development of the Year, and it became the high water mark in rents, not just for Richmond, but the entire region. The project was 88 million to build, and we were able to refinance during lease up at a value over 130 million, showing tremendous appreciation, which allowed us to return capital to our investors.
That's amazing.
Chasen is a 352 unit development a few blocks away from Otis, and this project is delivering this month. For investors interested in investing in OZ9, we invite you to come visit Richmond, and you can tour this project in particular. It's a good example and provides insight into the quality of product we build. As Jimmy mentioned, we were pleased to welcome him, multifamily economist Jay Parsons, and other OZ and Catherine, and other OZ experts to an OZ summit here in Richmond back in June, where investors and their representatives were able to hear from the experts and tour all these properties. Now to switch to the OZ9 development in particular. So we closed on the just over 2.1 acre land site the summer of last year. and we are currently in the final stages of design and preparing to submit building permits in the next 6 to 8 weeks. We signed a franchise agreement with Marriott to bring a hospitality component to this development with a new to market luxury brand called Apartments by Marriott Bonvoy. More to share on that in a minute. We expect to sign a contract with a general contractor and close on a construction loan by the end of first quarter of next year and start vertical construction shortly thereafter. With a roughly 2-year construction schedule, we will open the building in mid-2028, stabilize and refinance hopefully within a year after that. Here are some stats on the development program itself. 320 units. We'll have 5 residential levels situated over a 2-level concrete podium with parking and ground floor retail. We will have market-leading amenities like a pool deck, outdoor courtyard space, a fully equipped fitness center, and resident lounge. We've developed a business plan for OZ9 that we think will deliver outsized results for investors. We will operate a third of the units as an apartment hotel during the hold period under the Marriott brand, Apartments by Marriott Bonvoy. The benefit to investors is that the hotel units provide an NOI, net operating income boost over traditional multifamily units, and we will be able to have higher operating distributions during the hold period than we typically see in our traditional multifamily developments. And we have tremendous confidence in the need for hotel in this neighborhood. There is currently only one hotel constructed after the year 2000 within a 2-mile radius. So I'll repeat that because I think it's astounding. So in over 20 years, only one hotel has been built in a 2-mile radius in what is the dining, entertainment, and nightlife epicenter of this region. The closest hotel to this neighborhood is actually a Courtyard Marriott that's actually across the interstate. So not really in the neighborhood. And, we understand it's performing remarkably just because it's really the only game in town or in the vicinity. We have completed a third-party hotel market study, and we've engaged with several hotel operators and consultants to get a sense of demand and ideal product offering. There's strong demand for furnished apartments coming from tourism drivers in the neighborhood, like the museums and the baseball stadium that I mentioned before. Those uses alone bring 1.5 million people in combined visitors every year. Apartments by Marriott Bonvoy is a soft brand. So our building will look and feel just like a traditional multifamily building. It will have its own branding, but will provide this apartment style living for short and medium term stays, all while taking advantage of Marriott's powerful global awareness, their distribution, and their turnkey loyalty program, which I'm sure everyone is aware of, Marriott Bonvoy. Our franchise agreement is 10 years, which aligns really well with the Opportunity Zone hold period of 10 years. This means that we have flexibility in our exit strategy to sell the property as is with a mix of traditional multifamily and furnished apartments. Or if we decide we want to sell the building as a full multifamily building, we're able to do that. We just remove the furniture and we sell the building as a traditional multifamily building. Our unit mix, unit sizes, unit amenities, everything is commensurate with the Class A multifamily units that we deliver already. So I'll pass things back to you, Lewis.
Great. Wonderful. Thank you. We're talking about OZ 1.0 compared to 2.0. We're very bullish on Opportunity Zone Fund 9. It's a proven market. We believe and we fear that OZ's 2.0s will be poorer and more rural. This is an urban neighborhood. It is known. We live, work, and play here, and it is absolutely solid. We all know that you get 10 years of appreciation with tax forgiveness, but there's also a little nugget built into the Internal Revenue Code that deals with fair market value. Go to the next page. If you look off to your right, that's the Internal Revenue Code. Don't take it from me, take it from Congress. When the time comes for your gain to be recognized, December 31, 2026, the amount of your gain is the actual gain, and here's what's magical, or the lesser of the fair market value of the investment as of December 31, 2026. OZ9 will be in mid-construction on December 31, 2026. The fair market value of OZ9 will be less, dramatically less than the investment cost. And so the Internal Revenue Code tells us that our investors have this opportunity to recognize a reduced gain based on the fair market value of the property. There's an interesting white paper that's not quite out yet by Plant Moran accounting firm. It's top secret, so I can't tell you about it. But if you email one of us, we can send it to you. It goes through the fair market value analysis and talks about appraisals and the things that you need to do to be prudent, to take advantage. It's actually not to take advantage of it. This provision is mandatory. You must take the lesser of the fair market value or your gain. And there's a hypothetical valuation in the white paper that shows a 30% tax saving from the fair market value discount from a mid-construction project. So bottom line, we can have lots of fun debating 1.0 and 2.0. Lots of high net worth investors have capital gains now. They don't need to wait until 2027. They can reinvest their gains in OZ9 and comparable properties and enjoy the benefit of this FMV from mid-construction projects. We hope you'll join us.
Awesome.
We're having lots of fun and making our investors tons of dough.
Awesome. Thank you. Great presentation, Natalie and Lewis. Really appreciate it. We're going to move on to our next presenter, who will be Chris Rizzo. In just a couple more minutes, he's presenting Clear Mountain Properties. But first, want to get to a couple of questions here. Lewis, I dropped your email in the chat. So I think a lot of people like you. They're going to be reaching out. lrogers@capitalsq.com. Someone else just asked for it also.
I saw somebody throwing rotten vegetables at me from the good old days.
I'll post it again. I'll post it again.
Thank you, Jerry. I haven't seen you in ages, but we had a good time back in the day.
Oh, I'm sure you guys did. That was way before my time, probably. But anyways, let's see. Brad's got a couple questions. He wants to know, Natalie, he says he admits he likely missed it, but what's the minimum investment? And is there a preferred return to the investors?
Sure. Thanks for asking. Our minimum investment is typically $100,000. We can always make exceptions, right, Lewis? But that is
just for
our
you.
standard. Just for you, we'll make an exception. And there is a preferred return, 7% to our investors.
And what's the development fee to sponsors and the waterfall split with the sponsor?
Great question. Please get in touch with me or Lewis, and we will share our PPM that goes through all of our fees, all of our underwriting for this project. And if there's questions, happy to follow up and answer them.
Good. Let's see. Paul asks, what is your expected in-service target date range for this asset?
Yeah, so we plan to start construction spring of next year. It's about a two-year construction. So call it mid 2028 is when we expect to put this in service. Excellent.
And then a couple more questions, then we'll wrap up. They both relate to the fair market value calculation on 12/31/26. How much of a discount of fair market value do you anticipate at that deferral date, 12/31/26? And then a related question came in from Paul a moment ago. Are you, as the QOF sponsor, committed to provide the fair market value for all fund investors, and what valuation documentation will you provide?
The final determination is fact specific based on all the facts and circumstances at the time. The example in the Plant Moran white paper is a 30% discount. And we are committed to obtaining appraisals and things of that nature for the fund, so the investors have a basis on which to claim the fair market value.
Good. One more question I'll sneak in here from Michael. He says he has his own OZ fund. Can his fund be a direct investor in the project?
We wanted that. We wanted a fund of funds, but remember, we didn't get that in the One Big Beautiful Bill.
Right. I know he can't invest directly in your fund, but are you able to put him into the project level potentially?
You could put him into the sidecar of the project.
Okay, so
Let's talk.
I would say, Michael, please do reach out to Natalie and Lewis. I'm going to post Lewis's email address. I'll post Natalie's email address too, again, here in just a moment. But for now, Natalie and Lewis, we're out of time. I got to cut you loose. But thank you so much for your support of OpportunityZones.com and OZ Pitch Day. It's great to partner with you once again on today's event. Thank you.
Thank you. Let's do another OZ Summit in Scott's edition. You can see number 9.
Let's do it. I'm in.
Thanks, everybody.